All right, let's fucking do this. Number one, emotions today. Absolutely ridiculous. I don't really expect less from the community as a whole. I'm speaking strictly to the people who view my videos and support me. The rest of the community can fuck right off. I really don't care. You can complain and bitch and whine and moan all you want. I'm speaking strictly to the people who view my videos. Emotions today, a minus 20% day. What are you going to do when we start flying hundreds of percent to the upside? You need to learn to take your emotions out of the trade. That's number one. Number two, this move that we got today was projected. And if you guys remember me saying 2 months ago at the beginning of June, as we were trending down, right here, trending down, I was looking for a lower low, and we never got one. So I said this multiple times. On the way down here, we're looking for a lower low than our second bottom here. We didn't end up getting one. We started to trend upward, got this crazy move, came back down, and then today, crazy after hours move to the downside, checked off the lower low. This looks great. Nothing has changed at all. We're still in the flat portion. Everything looks great. The only thing that changed today is the positioning of where we are in the flat portion. It's very clear now we are at our third bottom, which is fine. So that's number two. Before I even get into this video, and I'm not a financial advisor, so this is not financial advice what I'm about to say, but I've been telling everyone, do not buy short-dated calls on AMC. All throughout this flat portion, this whole time that we've been trading down here, with the exception of the first bottom and the tri-peak here, I was playing short-term calls here. But when we came down from this whole entire time, from March until now, I have been accumulating nothing but January 19th, 2024, $25 calls. That's all I'm buying. The only options position on AMC that I am in are January 2024 calls. And I've been accumulating them for months now. That's number three. Short-term calls are always a risky play. And I've been telling people, again, not that I'm a financial advisor, stay away from them. That's number three. Let's get into the video now. And we're going to start with this because, once again, I want to reiterate what I was saying in my last video, is that AMC on the macro level is an uptrend. So the flat portion right here that played out leading up to the January 2021 squeeze, all-time lows on AMC. It's called flat portion for a reason, because you're flat on the bottom. All of your bottoms, they're pretty much in the same exact range, very flat to the downside. Exactly what we're seeing here. All three of the bottoms here, very flat to the downside. So this was all-time lows on AMC. You get the January squeeze, you get a pullback, you get a June squeeze, and then you get a pullback. And now we are playing out the flat portion once again, the exact same way that we're playing it out back here, except on top of the previous range as support. So we're playing out the flat portion once again on top of the flat portion back here as support. So this is an uptrend. This is higher highs and higher lows. All-time low, pump, pullback, higher low. Playing out the same thing, higher now. This is an uptrend. It's bullish. The positioning that we had was wrong. This spike really fucking threw me off. Very exaggerated move to the upside. Maybe you could argue we were nearing resistance and pushed through, and that was the volatility that you saw after hours. Now makes a lot more sense why we got halted. But nonetheless, this is an uptrend, and it looks great. Not to mention the final iteration here, I've mentioned this multiple times, is curling to the upside, and to the bottom, you are completely flat. So, getting into the macro, and we'll start with this because nothing has changed. Literally nothing has changed except our positioning. We have now just touched our third bottom, and we'll be forming this uptrend, the channel here, before you get the first gap, and then you come down, and the second gap. We're just back at the third bottom now. That's all that changed, is we're going to be tracking the third bottom now, the uptrend, the channel. That's all that has changed. So again, the macro perspective, macro fractal break right here, macro fractal break right here, the W that plays out, the W that plays out. And then you're just laddering down, one step at a time. 1, 2, 3, 4, 5, 6. Over here, same thing. 1, 2, 3, 4, 5, 6. Takes you into the blue on both cycles. So the cycle leading up to the January squeeze, which led to the June, and then from the breakdown in the flag in November, playing out this downtrend now, exactly how we saw it back here. So 6 points takes you to the end of the blue, and then from there you drop to the flat portion where you have 1, 2, 3 touches on the bottom. Again, I call it flat portion because it's flat. They're not all the same bottom, but it's flat nonetheless, pretty much in the same range. So 1, 2, 3 bottoms, an uptrend from your third bottom, breakout, squeeze. Again, the third bottom is the lower low that we were looking for. 2 months ago, while we were coming down here, while we were in this downtrend here, I was saying in every single one of my videos, we're looking for a lower low. Then when we got this wick pre-market into the $3 range and found a bounce off, I said, okay, maybe we're not going to get a lower low. I said we should, but we don't have to. So we started trending up, got the crazy after hours move, pulled back, and now we have got the lower low that we were looking for. So this looks great. So again, 1, 2, 3 touches on the bottom, 1, 2, 3 touches now on the bottom. Our lower low that we were looking for 2 months ago took a very long time to get it. This was very dragged out, very exaggerated, but nonetheless, the lower low is here now. I had an open bet in the Discord with G. Everyone knows who G is. I had an open bet with him that we would be seeing a lower low. While we were going through this downtrend, I said we're gonna find a lower low for the third bottom. Fuck you, G. Anyways, the macro is still perfect. Moving on. Getting into the flat portion now. Nothing has changed here whatsoever. I did move some lines around, and this actually makes more sense now, with the exception of this pop here. This was exaggerated, as I mentioned. Theorizing, we were close to breaking the triangle here anyway, and when we got the move after hours, you saw a crazy pump to the upside, and then we got the halt on Monday, 2 minutes into open, brought us back down, corrected the course, and now we got the third bottom that we were supposed to get. So again, January up top, the January cycle that led up to the January squeeze, 2021, on the bottom, current cycle. So coming down to your first bottom, on both sides, you come down to your first bottom, very choppy down here. Actually have a few breaks above this trend here, this yellow line. Very important trend here, this yellow line on both sides. So over here, the same thing, coming down to your first bottom, very choppy down here, have a few bounces above it before you get the gap up right here. So gap up, gap up. From that point, 5 peaks increasing height. 5 peaks increasing height. Now, this played out much faster in the current cycle than it did up here, and now the final iteration right here, the W with the tri-peak, is playing out slower. So now we are in this iteration here where we got our second and third bottom. So from the top here, from your 5th point, come down, you get that move in the green. So it's a W move, lower leg on the left. Bounces right on top of the yellow line. Over here, same thing. You come down, W, lower leg on the left. Bounces right off the yellow line. From there, you gap down to your second bottom, as you see it here. In the 2021 cycle, you had a very dragged out downtrend that took you to the bottom. Over here, just a straight knife after hours. So from your second bottom now, which breaks you below the yellow trend once again, you gap up and you get into the tri-peak iteration on both sides. So you gap up here, you get the tri-peak, and you gap up here and you get the tri-peak. Now, I'm theorizing that this was the third peak of the tri-peak here. And it makes sense as far as the trend goes, the yellow trend that I have here, touch points and everything. It was just exaggerated. It was an after hours move and was very exaggerated. That's fine. Just checking off landmarks here. So your first peak, your second peak, you come down kind of flat on the way down, and then you drop steeper, as you see here, kind of flat, and then you drop steeper, and then you get an uptrend, and then you get the third peak here. So you get the third peak. From the third peak, you drop, and you have an uptrend here. As you see it here, you drop, and then you get this uptrend. And then in the 2021 cycle, you get a very dragged out, slow downtrend to your third bottom. And in the current cycle, just a knife again. So the second bottom, very dragged out downtrend. In the current cycle, knife after hours. Third bottom, very dragged out downtrend in the 2021 cycle. In the current, knife to the bottom again. So this looks perfect still. Looks great, no complaints. It pushes us back a little bit, but regardless, we're not expecting any more downside here. What we are expecting now, having hit this point right here, like we're not getting any of this, it just all happened after hours. We just hit this wick right here. So the bottom is now in on AMC. This is your uptrend. This is the channel we're going to be tracking, and that's it. Break above this yellow trend, and we're off. Zooming in, same thing I just showed you, just zooming in on it. So again, coming down from that 5th point on both sides, you get this move in the green. It's a W with a lower leg on the right, kind of forms a cup. And over here, the same thing, W, lower leg on the right, kind of forms a cup. Gap down to your second bottom, gap down to your second bottom. It was a little bit slower here, nonetheless. Second bottom there, tri-peak, very exaggerated third peak, and then you get the knife into your third bottom. Again, very slow, dragged out downtrend here. Here, knife, which is that's great. You know, we're not going to be sitting through -2, -3% red days for a week or two straight, which is what happened right here. We just went right to the bottom, and now we will be forming an uptrend. Looks great, perfect. The gaps. The gaps have not changed. I rearranged it a little bit, but it has not changed. From the white here, you have your 3 gaps up, as you see it here. You have the 2 gaps here in the green. You have 2 gaps down, 1, 2 there, 1, 2 there. From your second bottom, you gap up into the tri-peak. 1, 2, 3, 1, 2, 3. You have 1 gap coming down from your second peak here, and that would be the equivalent of this gap right here. And then you bounce up to your third peak, and there's actually a gap here. It's very small, but it is there. Gap up to your third peak, spend some time there, and then you start trending down. And this was a very long, dragged out downtrend here. Gap down right here to your bottom. Instead, what we got, and it kind of makes sense, if this is your third peak, you pull back from it. So here's your third peak, you pull back from it, kind of chopping here in this range before you get the move down and the gap right there, which is what we have now. And now there's no daily candle here yet because the move is after hours, but when we get one, we're more than likely just going to be right in this channel and forming an uptrend before we get to this yellow flag right here, which is the first gap. Pretty much just starting the uptrend channel over again. First gap up, pull back to test on top of the channel, and then you're off. That's that. EMAs, same shit. So 20 EMA in the white, 50 EMA in the green. 2021 cycle on the left, current cycle on the right. 20s under the 50, get this wave move, higher peak on the right. Over here, same thing, wave move, higher peak on the right. Then you cross the 50 to the downside, as you do on both sides. You cross it at the second peak of the tri-peak, so this is a little bit different now. So you cross it in the second peak of the tri-peak. It's more like it's a touch. So here's your second peak. You get a touch there. You pull back. As you do here, you pull back under it. Well, it was under it the whole time. It was just a touch, not an actual cross. But you pull back under it, and then you cross it at the third peak, which you do here. You pull back under it, cross it at the third peak. When this daily candle opens at our third bottom now, the 20 will cross the 50 to the downside again, as you see it here, and then the uptrend will form. We're going to be fighting for the 20 EMA, more than likely, wherever that may be. And then we'll be looking for this gap once again. That's pretty much it for the video. Nothing has changed besides the fact that we are now tracking the channel uptrend again. For the past 2 months, however long it's been, tracking this channel here, there was a channel. We got the gap up we were looking for, came down to test on top of it. Fractals repeat. That's why it's easy to get lost tracking on a micro. And on a macro, the picture is much more clear. Tracking on the micro, getting into smaller time frames can be very difficult to do. I've mentioned that multiple times. Nonetheless, the macro is still perfect, just checking off the final third bottom here, the lower low that I was looking for this entire downtrend that we had here, calling for a lower low, and then we flattened out here, got the wick, and I was like, all right, I guess we're not going to get the lower low. We don't have to. Theoretically, we don't have to, but we should. And then we formed this uptrend, got the move up, and that was it. Just got a little lost in the tracking. It's fine. Third bottom is now officially checked off, undoubtedly. This is very clear. This is your third bottom. And I also mentioned that AMC and ABE possibly could meet at $3 for conversion, and more than likely that's what's going to happen. AMC will be a little bit higher when they convert, but nonetheless, they'll be around the same price. So I'm expecting ABE to start trending upward. And that's pretty much it for the video. No need to panic. How long have we been here now? 2 years? 2.5 years? Gonna freak the fuck out over an after hours move down that this is just gonna end with an uptrend and a breakout of this triangle anyway. How long have we been here? 2 years? Just fucking relax, guys. We're almost there. That's pretty much it. That's it for the video.